Welcome to the Analyst View by Capital Group, a podcast series that offers concise, investment-centric dialogues. In each episode, we'll dive deep with Capital Group's analysts to bring you focused discussions on sectors and themes shaping the investment landscape. Straight to the point conversations designed to provide you with the knowledge you need. In this episode, Investment Director David Polak is in conversation with equity analyst Todd Saligman on the future of the cruise industry. They discuss the sector's post-COVID recovery, the changing profile of cruise goers, how guests have exclusive access to a growing network of private islands, and much more.
Hello, my name is David Polak, Equity Investment Director at Capital Group, and I'm here with Todd Saligman, one of our equity analysts who focuses, amongst other things, on the cruise line industry. And we're going to have a conversation about this industry that touches many of us and is of interest to even more. So Todd, welcome. Thank you for coming along. I guess we should start the conversation with COVID. So we have a global pandemic. We see stories of people being trapped on cruise ships. And I think many of our listeners probably experience the emotion of, I will never go on one of those ships. I never want to be trapped like that. So here we are, nearly 5 years later. What's happened in the meantime?
Yeah, it's a good question. Hearing the reminder of COVID in some ways gives me PTSD following these companies during that time. I think for a couple of years post-COVID, it was pent-up demand. It was, the industry was shut down for a couple of years, and there's a group of people that are super loyal cruisers that love to be on ships, and they didn't get to do it during COVID. So for a couple of years, there was just kind of the pent-up demand recovering. But now we're really past that, and the demand today is really, I would sort of cite three drivers. First, I think the cruise product is better today than it's ever been before, and it appeals to more people. You see commercials for the new cruise ships. They're enormous ships. They're kind of the destinations themselves. They have so much to do on board. The product itself, they used to be sort of floating hotels with a couple restaurants and a casino. Now there's a million things you can do on a ship, and it appeals to tons and tons of people. The second thing is, people increasingly want services over goods. That's been a trend that's been going on for a long time. And it sort of obviously stopped during COVID, and now it's kind of accelerated again. People want to do things. They want to Instagram them. They want to show their friends. They want to show the world, and cruising kind of fits right into that. And then the third thing I'd say is, we've all experienced this land-based travel. The competitor to cruise has, in a lot of ways, gotten worse. Service quality is down as hotels and amusement parks have struggled to get labor. They're very crowded. Their prices are up a lot. And so I think the combination of a better product, increasing desire for services over goods, and sort of the deterioration in land-based has really given strong momentum to cruising.
Thanks. Your mention of experiences versus physical goods makes me think of different generations. I think of younger generations being the ones who've first started mentioning that. They want experiences. Have you seen a shift in the demographics of the customers of the cruise line?
Yeah, no question. The average age of a cruiser is getting younger and younger. I think it depends on the brand. Some brands, the mass market brands, Royal Caribbean, Carnival Cruises, Norwegian, I think the average age of a cruiser on those brands is low 40s. And I think across brands for the industry, the average age of a cruiser is now mid to high 40s. So obviously there's still a lot of older people that love cruising as well, but it really has shifted. And I've sort of seen it anecdotally. I'm a cruiser myself, and years ago, my friends and colleagues used to sort of laugh at me for going on cruise ships. And now those same people are calling me asking for my recommendations. Oh, I saw this commercial. Oh, friends in my neighborhood are going. They're taking their kids. Which ship should I go on? Which itinerary? So the cruise companies are seeing it, and I'm seeing it too.
How soon they forget. You mentioned the size of these ships, and I think all our listeners have probably seen either an advert on TV of these enormous palaces, elegantly going through the water. Is there a supply issue? I mean, presumably these take a long time to build, and does that help the industry structure in terms of pricing, capacity, all of those things?
Yeah, there is. So there's only three and a half shipyards in the world that can build cruise ships, and that number has stayed sort of the same, or actually on sort of gone down a little bit historically. And so what that means is the capacity growth rate of the industry as it gets bigger and as time goes on is just lower and lower, because there's more ships, but there's fewer and fewer additions relative to the size of the fleet each year. So historically, this industry kind of grew capacity at 5 to 6% annually, with the shipyards full, producing as many ships as they could. Today, with the shipyards full, producing as many ships as they can, the industry kind of grows 4%. So there's less capacity growth than there used to be, and that is a big benefit to pricing as more and more people come into the industry.
It's interesting. And you mentioned Royal Caribbean and Carnival. If memory serves me, they're effectively not quite a duopoly, but they dominate the industry. What is the difference between the offerings? I seem to recall that Royal Caribbean was kind of the higher end of the market. Carnival was more the mass end. Yeah, how would you differentiate them? And a follow-up question for that, how have the two stocks done since COVID? Have they gone up the same, or is there a differentiation between the returns of the two stocks?
Yeah, I think there's a lot of cruise brands. Royal Caribbean brand and Carnival brand are actually closer than you might think within the spectrum of brands, cruise brands out there. There are small differences. I would say Royal has sort of pioneered the large ship mentality. They've built the biggest ships with the most to do. You see the commercials today for the new cruise ships. I mean, these have everything you can imagine, from ice skating rinks to water parks, indoor skydiving, go-kart racetracks, bowling alleys, obviously casinos, bars, Broadway shows. There's just so much you can do. And so the bigger ships have more and more to do. And Royal has really been sort of the leader in the industry in innovating and building these ships with more and more attractions. Carnival is doing that now too. I think they're sort of a fast follower. I'd say the other sort of big difference is I would say Royal has sort of been the leader in the industry in developing its own private islands and destinations. That's a new trend in cruising, which has gained a lot of traction with customers, building their own islands and destinations that you can only get to as a Royal Caribbean cruiser. The islands are incredible and have tons of things to do that you couldn't otherwise do. And in fact, I think of all the destinations Royal Caribbean goes to globally, I think they go to almost 200 destinations. Their private island in the Bahamas is the highest rated destination in the entire company. So I'd say Carnival and Royal are more similar than they're different, but maybe Royal is just a little bit more innovative in bringing some of these new bigger ships and new islands and experiences to the industry.
And is it that at the margin that has driven the stock price of Royal Caribbean since COVID at a faster rate than that of Carnival?
Yeah, I think it's a couple things. I think it's first, it's that. It's they're really a little bit ahead in some of the things that people are really excited about that we talked about, the bigger ships, the private islands. Second, I think there's a little bit of a mix issue. Royal is a little more focused on the US and the Caribbean in particular. Carnival has a lot more exposure to Europe, and Europe just sort of rebounded a little more slowly coming out of COVID, in part because of some of the geopolitical things going on in the Middle East and in Russia, Ukraine. So Europe is coming back strongly now, but in the last couple of years has just kind of lagged the US and the Caribbean market a little bit. And then the last thing I think sort of has to do with COVID itself. I mean, COVID was a really tough time, of course, for these businesses. They were all shut down for 2 years plus, and to survive that period with no revenues, they all had to finance themselves to keep the businesses going. And Royal Caribbean was a little bit more disciplined and thoughtful in the financing and issued less equity. There was less dilution to shareholders during COVID. So it's kind of the combination of those things that coming out, the earnings at Royal Caribbean have accelerated and gone beyond pre-COVID levels much quicker than the rest of the industry.
And you've mentioned the private islands a couple of times. Few questions around that to unpack it a little. The island in the Bahamas is 500. Let's ask a question. Let me not guess. How big is it? Yeah. Is this one of many? Have they got more in the pipeline? Can we expect at some point, say in 5-10 years, these islands will be sprinkled around the oceans? And presumably, it's the space they have that allows them to do more things than you can on a boat.
Yeah. So the private island Royal Caribbean has in the Bahamas is called Coco Cay. I think there's 3 to 3.5 million passengers a year that visit the island. So 2 huge ships each day. They have a pier that has capacity for 2 ships, each with 4,000 to 5,000 people each. So it's sort of almost 10,000 people a day, get to 3.5 million people a year visiting the island. And the island itself isn't huge, but it's just Royal Caribbean guests on it. So it has an enormous water park with really incredible water slides. There's something for kids. There's something for adults. They just opened last year like a Vegas-style pool party area called Hideaway Beach. They have these amazing overwater cabanas that remind you of like Tahiti-style, hotel rooms. I mean, it's just there really is something for everyone. So that's gained a lot of popularity, and given that popularity, they're now opening these destinations. To your question, in the next couple of years, they're going to open a new destination like that every year. So this year, in 2025, at the end of the year, they're going to open up a new destination in Nassau, right next to where the cruise ships dock. It'll be for Royal Caribbean customers only. There's one coming out in Cozumel, I think in 26, and in 2027, they're planning to open a huge it's not an island, but a destination in another one in Mexico that's going to be even bigger than Coco Cay. And I think that'll really appeal to the Texas market. Right now, if you go on a cruise from Texas, you can't reach their private island, Coco Cay. This new location in Mexico will be reachable from the Texas cruises. So it's a big driver for the cruise companies. It's not just Royal Caribbean. Carnival's doing it as well. Carnival's got a number of private islands and destinations in the Caribbean some of which they have already that they're going to enhance over the next couple of years, and Norwegian is doing the same.
This, of course, is good news for the cruise lines, because in the past, people would pile off ships in a resort somewhere and spend the money in that locality. And now they're piling off those boats and they're spending money in their own island. So they're keeping every dollar that is spent. Does that cause any tensions, or are they partnering with those localities when they build out these islands and resorts?
Yeah, it's a great question. And the answer is they're really partners with the countries and cities where they're building these. In most cases, the countries own a share of the islands or destinations, or they're getting a tax for every customer that visits them. So Royal Caribbean and Carnival and the cruise companies are getting more money, but the countries are also getting more money because the destinations are so attractive. They're attracting more people to the industry and therefore more visitors to the country. So it's really a win-win for everyone.
Well, thank you, Todd. I mean, that's been a fascinating journey around a really interesting industry. One that I've not really looked at in the past, but maybe I will. And I think a number of our listeners will probably finish this podcast and go online and start booking themselves some cruises. So thank you.
Thanks for having me.
The Analyst View is brought to you by Capital Group, one of the world's largest and most experienced active investment managers. If you like what you heard today, please follow us on your favorite podcast platform as well as LinkedIn. Thank you for listening.
This content is intended to highlight issues and be of a general nature. It should not be considered advice, an endorsement, or a recommendation. Products mentioned are not an offer of the product and may not be available for sale or purchase in all countries. All investments have risk and you may lose money. Past results are not a guarantee of future results. Statements attributed to an individual represent the opinions of that individual as of the date published and do not necessarily reflect the opinions of Capital Group or its affiliates. This content is published by Capital Client Group, Inc. and copyrighted to Capital Group and affiliates. 2025. All rights reserved. For full disclosures, go to capitalgroup.com/global-disclosures.